Good afternoon, this is Chris Brecher with the Simpler Stocks free video for June 1st, 2016. It's about 14 minutes after the close. We had a special 1-hour session today from 3 to 4 Eastern where I was going over just the basics, back to the basics, talking about chart ideas, how we look at unusual option activity, looking at the MACD, all the stuff you get free with in the Learning Center. Now, a couple of things I wanted to bring up before we go into the overall market is when you sign up for either the 7-day, 30-day trial or to the monthly, just the monthly newsletter, and both of them you get the same thing. It's just after 30 days, then you have to pay up. Whole idea in here is you get the email alerts where you get stock trades and chart ideas. You also get the chat room, which is usually 9 to 10 a.m. Eastern. You get the meetup, which is what we did today. So what I mean by that is if you go in the chat room in here, let me find exactly where I put it in here. Give me a second. And you go into the meetup, you'll see reviewing the basics, live trading webinar, and that was today. Unfortunately, you got to see my face again. I apologize for that. Whole idea in here is we went over all kinds of different strategies. See all these underneath? Power of pin plays, putting it all together. Watch out for ARBs, ATR trailing cross stop. Those are all 15-minute to 1-hour learning videos that I've done as a member's bonus, that if you're a member, you're able to access these all the time. You can't download them, but you can access them as long as you're a member. That was the type of stuff we went over today. Now later, after I tell you about some of the indexes, I want to go into some of the alerts we did and how those have done, even today. So first thing I want to mention today is the ES is closed down all at 250. They were down about 10 points at the worst. NASDAQ, believe it or not, near its high. Russell up all of 3. Bonds up a little, up 5. Where the Nikkei up 150. Transport's up a bit. Crude oil down a bit. It had a little bit of a reversal. You had China way up, like up 3% after there was a flash crash last night. And once that reversed after about 1 minute, it just kept going on the way up. VIX up today about a point. A lot of people starting to rush in to buy some puts in here. But even though you see in here, the put call is still pretty low. Other thing you see in here, the grains getting nailed. Now, why is the grains getting nailed important that I'm even bringing it up? I'm going to show you the correlation with bonds. Very interesting in here. I get all the time on here where people say, why is the market going up if bonds are going up? Aren't the bonds showing a flight to quality, and that means we're going to crack? First thing I want you to realize in here is, here's a weekly chart of the SPX. Now on the right, I'm going to put the weekly chart of the bonds. For anybody saying that they're an inverse correlation, and we've been having problems with Thinkorswim, so if it's a little slow, I apologize for this. Whole idea is, see this rally from 2013 on? Look at the bonds on here. Notice something interesting? They've had a rally since 2013 on. The whole idea is the whole reason the market's up this much in the first place is because of the bond market rally. That means yields are real low and there's nowhere to put your money except the market. So anytime anybody tells you that, I just don't believe that. I think they move together. Even this. Look at this nice move here and the nice move there. So just understand that doesn't have any predicting powers in my book. Number 2 in here, I want you to see something that does correlate pretty well. And I always find interesting correlations. Look at bonds on the left here, and I'm going to take off the futures. See how they had this big pop today? Notice wheat on the right. Notice what wheat did on a 15-minute. There are a lot of people worried that inflation, the worst thing for bonds is a whiff of inflation. When you see this sharp a move in wheat on the right, that usually leads to a sharp move up in the bonds, and that's exactly what happened today. So just understand that they don't always move together, but if people are worried about inflation and they see that, that always lends a bid to the bonds. That's what I was saying. The bonds going up had nothing to do with the overall ESs today. They had more to do with grains. Another thing in here about interesting correlations. A lot of people talk about Deere and Caterpillar. So I want you to see Deere on the left, and I want you to see Caterpillar on the right. What I want you to notice is obviously they haven't correlated that well at all. But one thing I think you'll find very interesting, at least in the last, let's say 3 months, is look at deer on the left and put corn on the right. Notice when this rallies, this rallies. Notice that when this had a massive sell-off in April, this had a massive sell-off right here. Very interesting. Very interesting on how that works in there. Second thing I want you to realize in there is put Caterpillar up there and then put the Chinese market up here. You know, Caterpillar depends a lot on what's going on overseas. Check that when this started rallying, Caterpillar started rallying. When this sold off, Caterpillar sold off. It's not a coincidence. Very interesting on how they're correlated. I love to watch stuff like that. So a couple of other things I wanted to mention in here. ES is, like I said, up 250. One thing I want you to realize, we're right at resistance right now. We're starting to get some sentiment indicators to get a little more bullishness, which in turn is bearish. And I want you to realize we're right at resistance and overbought. Keep that in mind this week. Second thing, what outperformed today? The Russell. Good. A big theory that I showed over the weekend in all the charts I showed is if this Russell has another leg up, they might, the hedge fund managers might dump the consumer durable stocks and the consumer staples that have basically been not only holding up the market, but they've been like a flight to quality, like the safety trade. And the thing about that is now the PE of a lot of the consumer staples is in the sky, like 26, way overpriced. So the whole idea is it's real possible that you're going to start getting a rotation. Now, what I mean by that is, let me show you. See this stock trades and chart ideas? Check out what I posted last night. Consumer staples, more defensive stocks as shorts. Almost every single one I posted fell apart today. I put in things, here's the XLP, the consumer staples. So you have XLP right here. Then in here, I want to show you some of the things I was looking at in here. Look at Clorox on the right. Now you have to understand, I'm trying to not only have a theory, but I'm trying to combine it with chart patterns. Check that out. Nice little sell-off. Here's another one. Look at General Dynamics. Another nice sell-off. That's one of the things you get with your subscription is you get your email alerts where I post charts every night. And I post index charts and I post ideas. A lot of times my ideas are a lot more creative than a lot of things you'll see out on the street. So try to give it a try. Like I said, it's $7 for 30 days. I think you'll find that it's really worth it. So everybody take care. I will talk to you tomorrow. Have a great night.